Chasers! Welcome back to another episode of the Chasers channel, the podcast where we dive deep into the world of business and finance and bring you expert advice to help you make informed decisions to bring you closer to achieving the dreams you are chasing. Today's episode is a warning for self-managed superannuation funds, or SMSFs, with a residential property. There's going to be a new tax. Called the Vacant Residential Land Tax, or VRLT, that will now be imposed on Victorian land where the land is taxable, residential and vacant. I'm your host, Chris Becks, a financial and business advisor with over 40 years experience and the founder of the multi-award-winning CBEX Business Solutions for Good. And because this is a financial planning topic, as an authorised representative of Interprac Financial Limited, I'm obliged to give you this general advice disclaimer before we begin.
The information provided is for educational purposes and is general advice only, as we did not take into account your investment objectives, financial situation or particular needs. Before making an investment decision on the basis of this advice, you should consider how appropriate the advice is to your particular investment needs and objectives. You should also consider the relevant product disclosure statement before making any decision relating to a financial product. Chris Becks is a director of CBEX Financial Solutions and an authorised representative of Interprac Financial Planning Proprietary Limited, AFSL 246638.
Okay, now that is done, let's dive into this episode. Previously, the Victorian Vacant Residential Land Tax only applied to specific council areas around inner and middle Melbourne. However, in October 2023 that all changed when the State Taxation Acts and Other Acts Amendment Bill 2023 was introduced into the Victorian Parliament and will now affect Victorian land where the land is taxable, residential and vacant. SMSF trustees with residential property in Victoria will be impacted by the proposed change to the Vacant Residential Land Tax, VRLT, set to apply from the 1st of January 2025. The changes will specifically impact SMSFs with residential property that remains vacant for more than 6 months in a year. The expansion of the VRLT to apply to all Victorian vacant residential land represents a substantial change in policy and is seen as a desperate tax grab by the heavily indebted Victorian government to raise more tax. Property owners need to be aware of these changes as there are many who may be impacted and there is limited time to prepare. Previously, the VRLT only applied to specific council areas around inner and middle Melbourne, and this annual tax was calculated as 1% of the capital improved value, or CIV, of the taxable land. This means that SMSF trustees with vacant residential property could face a significant tax bill. For example, an SMSF trustee with a vacant residential property in Melbourne with a CIV of $1 million could face a VRLT bill of $10,000 per year. Furthermore, the CIV can be substantially higher than the unimproved value that the land tax is imposed on. VRLT is imposed in addition to any land tax, assuming the VRLT criteria is satisfied. Now, the State Revenue Office assesses the value of the land, including the value of any buildings and capital improvements on that land. There are a number of exemptions to the VRLT, including primary places of residence, primary production land, properties that are occupied by the owner for at least 4 weeks of the year, and the owner has a primary place of residence in Australia. Workplace or business properties occupied by the owner for at least 140 days of the year, for the purpose of attending their workplace or business, commercial residential premises like hotels and motels, residential care facilities, and land used for supported residential services or retirement village services. SMSF trustees with residential property in Victoria should review their property portfolio to determine whether they are likely to be affected by the proposed change to the VRLT. If they are, they should consider their options, such as selling the property, renting it out, or transferring it to themselves personally and using it as their principal place of residence. SMSF trustees should also seek professional advice to ensure that they are complying with all their tax obligations. In summary, the proposed change to the Vacant Residential Land Tax, or VRLT, in Victoria will have a significant impact on SMSF trustees with residential property in that state. The expansion of the VRLT to all Victorian vacant residential land represents a substantial change in policy and a keen desire by the heavily indebted Victorian government to raise more tax. The proposed change will affect SMSF trustees with residential property in Victoria that is vacant for more than 6 months in a year. This includes properties that are not being rented out or that are only being used as holiday homes on a casual basis. As with any financial planning or matters relating to tax, always get some advice from an expert before you do anything. It's good insurance against costly financial mistakes. Thank you for listening. I'm Chris Becks, and I look forward to presenting another episode to you real soon.
If you enjoyed this episode and you'd like to help support the Chasers channel, we would love you to share it with your business friends and colleagues, post about it on social media, or leave a rating and review. To catch all the latest from CBEX Business Solutions for Good, follow us on Facebook at facebook.com/CBEX, Instagram @CBEX, and on the internet at cbex.com. Thanks again, and we'll be sharing new info with you on our next episode.